Ray Wagner here, approximately 11 a.m. in Honolulu, which makes it 4 a.m. in New York. It is Tuesday, the last day of January, the 31st, 2012, and this is the Daily Report for Gold and Silver. We have a mixed bag in the precious metals markets this morning. We have gold currently trading higher, up around $8-9. As you can see, current print on the screen is approximately $17.39. We have the rest of the precious metals complex lower. Palladium down 2, platinum down 24, and silver off 35 cents on the day. In terms of the marketplace itself, we do have a higher dollar, and this is for the second day in a row. You can see that right here with our dollar index chart. It's against a basket of 6 foreign currencies. So it looks as though, at least on a tentative basis, there's been a little bounce. Will it continue higher? Personally, I think it will probably turn around, but we'll have to see. You can see that there should be a good band of support right in this area. Even if it does come down, we'll have to take a look at that through the week. First thing that I do want to do is look at the gold market, because we have seen a 7-week high when we consider that this market is moving back up and where it's been over in this area. As best I can see it right now, we have a couple of different areas of resistance that we want to pay attention to. We are currently at one of them right now. We're looking at our Henkin Ashi, so it's a Japanese average chart. And as you can see, we're looking at a 360 minutes, so it's an intraday chart to give us a little bit more complex of an idea in terms of looking at different sub-wave counts, these minor wave counts that come within the majors, the intermediates, and the minors. So when we take a look at that, you can see that it has hit some sort of resistance that's roughly around 1740. And when we look at the marketplace itself, that would be one level, and the next level that I would look at would be this top right in here, which would come around 1800. I do think that we have the opportunity to see this market move higher. The question is, when will we see some sort of a corrective wave, even within this bullish framework? As you know, I am extremely bullish on the market right now, but even bulls realize that the market's going to correct, so we just want to be aware of that. We've moved our stops up. Our stops are currently sitting just below 1700 right in here, and as you can see, we've got $38 to $40 on that. Of course, we went long this market roughly at 1580, so we've got a really good trade underway. The whole idea is to keep it there, to keep the profits, and to maximize on what we are seeing within the marketplace itself. Next chart I do want to take a look at is our weekly chart, and I'm also going to convert this to a daily chart. And as you can see, it's only Tuesday, but we reached these lows. These lows were the lows that we got when they opened Monday in Australia, went overseas. The high, we're trading up near the highs, 40.41. When we go ahead and convert that to a daily, and let's go do that now, you can see that in terms of a daily, and this is a 28-day moving average. I had it at 28 weeks as the weekly. But as you can see, we've hit a little band of sideways action. And what I really have seen in these markets lately is that in a typical market where it will move in a, call it a sawtooth manner, correction, rally, correction, rally, correction, we're getting a little bit different kind of a play when we're getting this kind of a bullish rally. So what we're really seeing is we get the market rally, trade sideways, rally, trade sideways, rally, and then again here we're trading sideways. You can see it's trading sideways here also. So rather than that classic sawtooth, we're getting this rally sideways motion. And what that does is it's not putting the kind of pressure, and the volatility has actually gone down within this marketplace itself. I find it quite interesting. It's not something that we see typically, but when we do see it, we're seeing it because we're looking at an extremely bullish market. On to silver. Now, in silver, we do have that, like the rest of the precious metals complex, under some pressure today. We are currently looking at our daily chart. It is in straight candlestick format. And as you can see, in silver, unlike gold, we have had more of a typical rally, correction, rally, correction, rally. Here we had some sideways. But so for us to see a rally and a correction right here is not going to surprise me that much. The one thing, though, in terms of a candlestick pattern that I am noticing, and this is after our second down day, this is on our daily chart a shooting star. So a shooting star found after a defined uptrend is absolutely something we want to pay attention to. And when we go ahead and convert this daily chart, candlestick chart, into a Henkin Ashi chart, what you're seeing is that we are getting today that classic doji formation. Doji formation is simply a price point on a daily chart. It is a daily candle in which the open and close are very, very similar. Now realize we tag our open differently on a Henkin chart than we do on a candlestick chart, in that our open is really the midpoint of the prior session, in this case the prior day. So it is something that is noteworthy, but then once again, this market, as I said, has been able to trade, form a base, and then move off of that base. So we're going to have to see. The market itself has been very, very strong. We've seen nice rallies throughout this marketplace throughout the month of January. We'll have to see as we go into February if that will continue. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.